Jim, today is a rough day in the markets. We've got the markets down around 470 right now.
A lot of people panicking. A lot of people on the floor panicking. A lot of people I talk to are just kind of saying, listen, it's over. The Yuan devaluation is the last straw. And I come back and say, all right, so let's think what happens 3 days from now. All right, 3 days from now. Will there be another devaluation? Maybe. Look, could they take it to 7.25? I don't know. I think they want it at 7. Can the president take tariffs up? No, because he already said he's going to wait till September 1. Can they? Here's the wild card. The wild card's Hong Kong. Because I genuinely believe that the Chinese, the PLA, is not going to let Hong Kong go. So you have to watch Hong Kong. But even then, once you get a crackdown on Hong Kong, then what? And the answer is that we are very static-looking people when it comes to the market. What we think about it is that day. We don't think about what's going to cause panic 3 days from now. If you look at all the contagions, they last a certain amount of time until there's nothing more to do. And I look at the China situation, and I think that the president very much wants to 25 basis on everything. Okay, so everything's going to have 25% tariff, everything. So they go to September 1. On September 2, if the Chinese haven't bought any ag, which they probably won't, maybe they stop fentanyl, that's the obvious one. On September 2, they go to 25. He says those be till October. Remember what the president really wants. It's twofold. One is he wants American businesses to be out. That's very important. And by the way, he's not as sensitive to where they go. Vietnam's fine. Mexico's fine. We'd love it here, but it's not as important. To get businesses out. And then number 2 is to stop 2025. These are things that people don't understand. Whenever you hear that the Chinese are playing a long game, here's what they're missing. They're playing a long game on trade. Trade is what they're playing a long game on. The president is not nearly interested in trade. He is interested in shutting down the Chinese. I want people to remember that the Chinese are communists. And there are many periods in our history where the Chinese and all communist nations have been cut off. So what you could see, the president wants that trade number down very badly. Now he also says, look, he tweets that the Chinese are paying the tariff. That is not exactly right. I hesitate to say it's not right at all because there is the Chinese have eaten some of the tariff. But I think that people really should be recognizing that there is that the two are not in sync in what they want. The president doesn't want more trade with China. He wants the country to have a lower GDP and to have less expertise and be less of an enemy. That's what he wants. People keep confusing, and it drives me nuts. They just don't get that what the president wants is the opposite of what we keep hearing. He wants trade down. And that's going to be a continual theme. And as long as you recognize that, then you're going to be able to trade better and invest better.
Well, it's not all bad news because we just had our first trade behind us for AMTD. They're at around $8, $9 right now.
There's a big Chinese company, right?
Yep. Okay,
right
so Jim,
just a second. 6 feet from us, right? Very happy. And I think what's interesting is that will be cut off too. That will be cut off. There are people within the administration who want to cut off now. And I think that people have to understand that our capital markets will close to the Chinese. Because if we're trying to slow down their economy, which we are, we're not going to let it be fueled by our country. So you won't see things like this 6 months from now if this continues.
That's a very important point that I don't think that we've touched upon.
No,
before.
I mean, no one's thinking about the right stuff. They're not doing enough reporting. They're too much focused on the Fed. They're too much macro. They don't want to make the calls. They don't have good contacts. They feel very strongly that that the mission is how to get the Chinese to buy more soy. They are very out of touch with the president's people, and that's because they are dismissive. A lot of the people who come on are dismissive of what the president's doing. Look, I had a fight with my wife about this. My wife was like saying, "You're pro-Trump." I said, "I'm pro-fact. I'm pro-fact, and I'm going to stay pro-fact because that's the value added that I can bring."
Now, we're still down around 450 points. Are we still oversold?
On a percentage base, no, we're not that oversold. That's the problem. We came in -3 on the oscillator. You can't anticipate the oscillator. You can't just say, okay, it's going to come in -5 tomorrow. That's not what you do. You have to wait till the whites of their eyes. So we're doing some portfolio shuffling that should produce a little bit more, even more cash, because we're pretty much convinced that, with the exception of the Verizons of the world, you're not going to see anything really bottom today. But we are going to be equipped to be able to pick at things because midday there'll be usually a margin call. Someone will be poorly positioned. There's someone who will panic again. Someone will say, you know what, it's only down this, it's only down that, and they'll avail themselves of bids. And that's when you strike.
So, Jim.
It's really garden variety sell-off. And yes, if you're long certain stocks, it doesn't feel very garden variety. IBM. Like IBM, there's 2 notes today that are positive. IBM is now back to where it was before it reported that good quarter. So let's use that as an example. You've got Red Hat coming on. You've got some blockchain announcements. IBM at 138, I'm tempted. I'm not going to say I'm not tempted. Good yield. You know, when you get these 4% yielders with the 10-year at 1.7, you know, you're being clear-headed. If the balance sheet's good, you're being clear-headed. You're being cloudy if you're truly thinking, wow, the S&P's down, I got to be careful. Leave that to the hedge funds that just trade S&P futures. Don't be that. You're better than that at home. I'm going to home gamers here. Do not be scared that the Dow could be down 700. We're up a huge amount. We're at a very high level for the Dow. There are a lot of technicians who are saying every level's being taken out. Let them do that. And let's not forget, there's a lot of analysts who simply did not get that they have to cut numbers. And when you have to cut numbers tomorrow, you know, you'll feel like, why did I buy today for some of these tech companies, which the numbers have to come down? And that's what you have to steer clear for. Until the numbers come down, you are at risk. You have to wait for number cuts.
Now, I just want to clarify, because 2 seconds ago I said the Dow was down about 450. My Apple Watch actually had not updated the Dow. It's down about 530. Jim, what is the significance of...
It's always good you watch that.
See,
watch that. They have
exactly, there we go. Okay, so Jim, what is the significance of a country letting its currency slip?
Well, it's a mistake by the Chinese. They genuinely think that, again, this is their mistake. The PLA is making a very big mistake. They genuinely believe that if you make it so that your products are cheaper, then they'll be a winner somehow. Of course, if you put a 10% tariff and you devalue your currency by, say, 1.5, no. I mean, Apple's still going to, the Apple, whatever's made there, is going to cost more. The cell phone's going to cost more. So they are playing out of a playbook that is really very ill-advised. I mean, they are going to have capital outflows. When you see gold go up, a lot of that is China. The gold stocks that I like Agnico Eagle, which is the growth gold. I like Barrick for value. That's Bristow, who runs Barrick, and Sean Boyd, who runs American Eagle. They are seasoned pros. I really like them. So you can buy some gold off of what will be a panic inside China. And remember, the PLA runs things. The PLA is right now, I think, very transfixed on Hong Kong and trying to figure out whether you need to do a Tiananmen Square. Not unlike, again, this is what I'm talking about in terms of the government, not unlike Russia when it came to Czechoslovakia or even Hungary. And there are people within the administration that genuinely feel that it's a communist country, old-fashioned communist, and you have to go back to pre-ping-pong diplomacy to see what they really want to do, which is shut down China. I mean, you can talk about a long game with trade. They're talking about a short game with shutdown. Now, when I talk about regime change, my sources say, Jim, I'm extremist, okay? And just so we know, long before Donald Trump, I believe, was concerned about China, I was. You got to go back to Kudlow and Cramer days, 2001, 2, 3, 4, 5, where I was adamant that we have to have not free trade, but fair trade. It's always been my position, dating from my family and what I saw happen in the gift-wrapped industry. So those who say, so there's a lot of people on Twitter who say, oh my God, he's just a lapdog to Trump. Why don't you switch that?
Jim, let's talk about your real money call.
Interviews that I did many interviews with him where I was adamant and he was adamant about what has to happen with China. Go back 10, 15 years. And Larry Kudlow is now his chief economic advisor, and Larry was for free trade. And I thought Larry was dead wrong. So we have to see what happens with Larry, because I know Larry's position. Now, Larry may have changed position from them. My position is unchanged. I have the exact same position in China that I've had pretty much since 1980. Communist country.
Jim, I want to talk.
Targeting our companies. I like Mercury.
Let's talk about your real money column. Now, you penned a real money column about 7 sectors that you should consider buying into during this trade war.
Right. I mean, what I want to do with that piece is I want people to understand that after today, you should do homework on these. After today, you'll look at stocks and you'll come home and you'll say, wow, I can't believe that stock got to this level. And then you're going to be tempted to say, but oh no, it's going to be really bad tomorrow. Now, you have to take your cue from research. Let's use the stock of Walmart, okay? So Walmart's back to 108, right? Now, Walmart was much higher, and they reported a great quarter. Walmart has 50% of Walmart is food now. That's not in things that are made in America. They do have exposure to China. Their margins could be crimped, but they have a lot of buying power, so that it may not be as bad as you think. That could be a very interesting story. We own Home Depot. We sold some at 220. Here it is all the way back. So tempting, but we have a 189, 190 basis. Again, I'm looking at IBM because of a catalyst. So we're still selling some things that we're up huge on, and we think it's right. By the end of the day, we'll have more money in than out, most likely. That's fine. But you've got to be very careful tomorrow to have more money in than out. Right now we have more money out than in. That's what I'm worried about. See, what people have to worry, there's people who are worried. You can't take it from the floor because there's really not a lot of people here anymore. A lot of governors. It's not like the old days. But, quote, not like the old days. But a lot of people are worried, will be worried tomorrow about what they should sell. That's when I am worried that I won't commit capital, for action alerts, that I will be too weak. I have to steel myself to be able to examine stocks like a United Technologies, which has a lot of China exposure, like a Honeywell, where we sold some much higher, and then make determinations. And the fight within my brain is, okay, we're not down as much as Europe. We're going to get downgrades tomorrow. I don't want to buy a stock today that could get hit by a downgrade, but I am very intrigued by prices.
Jim, how can you spot a landmine in this market?
Excuse me?
How can you spot a landmine in this market right now?
Well, I mean, you just have to look at how much is China exposure, how much was going to be of growth, was going to come from China. So you look at an Emerson. Emerson was down a lot. There was a recommendation made by Emerson. I'm not as certain on Emerson because I don't know whether their numbers are too high because of China. I don't want to buy stocks where people say the numbers are too high. Now let's contrast that with McDonald's. Numbers aren't too high. It's interesting to me. Are the numbers too high? Starbucks? They just reported. Will there be a mass exodus from Starbucks? I don't think so. Now, will there be problems with Nike? Conceivably, okay? Because China's really, really important, and they've got a problem with. They have a problem with Yuan. That's true. 3M, okay? 3M, a lot of China, just not up to snuff. So I mean, I can go down the list now. What I will hear people say, and it's typically people who do very little homework on individual stocks, why are you bothering Jim? Well, if you take a look at what we've done for action alerts over and over and over again, the crowd that says, what are you bothering with, is a crowd that does not look at our basis. If you look at our basis of what prices we bought for the club, I think you'll see why we're doing what we're doing.
Speaking of the club, I know that you guys just put out a bulletin about where you'd buy every name in your portfolio.
Yeah, and I think it's really important for club members. Check your email. This is what we do. We all work over the weekend. Came in this morning, Jeff and Zev, went over every one of our stocks because that's what a good portfolio manager does. We're demonstrating what portfolio managers do. And we're quite confident that you need to take action on the ones that we say take action on. Pick your favorites. Remember, it's a club. We're not telling you this is our it's more of a recommend list. See, when I was at Goldman, we had, say, 80 stocks on the rec list. And no one thought that was reckless. That was the way we did. We're doing the same thing for the club. we happen to have a charitable trust, but you can buy some things. Half the things I wanted to buy today, you can't, just because we mentioned them. But I feel strongly that people have to see that we're a recommended list and a club that's very inexpensive versus what you would get at Goldman or Morgan.
Now I want to break down Jeff Marks and Zev Fima are both analysts for Jim's Action Alerts Plus charitable trust. All right, Jim, that's all the time that we have for today. We got to head over to Action Alerts Plus.
Yeah, we gave you a special longer program because the market's down so much, and I appreciate you staying with us, but now we've got to skedaddle over to the people who pay.
Exactly. All right, guys, thanks for joining us. And if you're on TheStreet.com or on Facebook, go on over to ActionAlertsPlus.com where we'll be. All right, I'm Catherine Ross, and I'll see you tomorrow.